And so I would like Dave to come up and give us a few minutes on an update on venture capital in San Diego. Dave?
Thank you, sir. Good morning. For those of you who are in the back, feel free. There's tent cards up here, but there's plenty of seats, and our sponsors are happy to have you sit down. And for those of you who are looking for money, that's one of the venture guys walking the room there. So, you know, it's hard to believe that this is my 4th venture summit since I took over as president of the venture group. In that time, we've had over 100 cool companies. We've had over 350 different VCs come to San Diego for Venture Summit, and we've had 25 different speakers. Today alone, including the mayor, we'll have 12 different speakers, so it's really quite exciting, and I thank you for being here with us today. Of course, I do not do this alone. We have... Oop, we're going too fast here. Guys, I got it. You know, we have a great board here. It consists of venture capitalists, entrepreneurs, business advisors, and they have 2 things in common. One of them is that they care about building our ecosystem here, and the other is that they work. When you come to one of our venture group events and you have great content, the reason you have great content is that our board has put it together. So I would like for our board members in the audience today to stand up and be recognized. Okay, so we are a lean organization. You know, we could not put this program on without a number of volunteers. Besides our board, today's event is put on with the help of over 20 volunteers. So I would like to thank all of our volunteers. They were led this year by our Venture Summit Chair, Randy Sokol of DLA Piper, and most importantly, our program manager. Over 150 emails a day have been coming in to Nicole@sdvg.org. So please give a big round of thanks and applause to Nicole Walters. Where are you, Nicole? She's hiding. She's right up here. So, you know, our mission at the Venture Group is to support and promote the venture capital ecosystem here in San Diego. And in January, I talked about a number of facts and figures about venture investing. If you missed that, you can go to our website and find those slides. You can sign up for our Twitter feed, our LinkedIn group, our Facebook page, and you can get them through there. You can also, if you join one of these social media forums for SDVG, get my daily tweet. Almost every day I put out a news feed about something related to venture capital here in San Diego. So it's a great way to quickly keep up to date on what's going on. So today, rather than facts and figures, I want to talk about what's going on in San Diego and the venture world. We have a vibrant and active community here. You've seen it this morning. You've seen it all this week during Startup Week. You know, people ask me to advance the slide, but it doesn't go. There we go. People ask me how the life science guys are doing, and I tell them they're partying like it's 1999. I mean, really, we've not seen such a sustained period of public market support for early stage healthcare, I think, in my whole career, which unfortunately now is getting somewhat long. These 13 venture-backed companies have all gone public in the last 18 months. And while an IPO may be just a step along the way, it is in fact an important part of the ecosystem and what drives things forward. At the same time, we have an explosion in incubators, accelerators, mentoring, and support programs, from digital health to cybersecurity to biotech to software. If you can't find help for your company, you're not looking very hard. In fact, you know, one of the new challenges is sorting through all these programs, and there's even more, to figure out where's the right place for you to be. You know, is there an app for that? I don't know, but it's a good problem to have, and it reflects the vibrancy of our community. We also have a strong set of collaborative community partners. And if we go forward, they'll show up on the screen. There we go. You know, it's by working together, and Venture Summit's a great example of, we work with Connect and ComNexus and a bunch of other people, sports innovators. You know, we build a stronger community. It's sometimes messy. I did this chart just so I could figure out what the hell was going on. But it makes it all work, and I really appreciate all the partners. There's too many of them to thank by name, but I appreciate all the help that I've been given there. So we also have a growing community of venture investors. It is different than it was 15 years ago. No one should be shocked by that, okay? But from large firms like JMI, Avalon, and Domain, to our small VC startups like Crescent Ridge or CWC, to sole GPs here who are part of bigger funds, Ken Witter of Lateral or Paul Grossman at Telegraph Hill, you know, there are over 100 individuals who make or manage venture capital investments and live and work in San Diego. And yes, we would like more. In fact, in the last year, 6 new firms have started making investments or opening offices here in San Diego, and you see them on the screen. Our newest one, Venture 51, will be our newest venture link. So for you early stage tech guys, which is what they're looking for, we're going to do a venture link. You apply, they'll select some, and we'll set up a series of 1-hour meetings for people. So we're very excited about that. We continue to do that. People want to be here. They want to be here because it's a great place. They want to be here when there are great companies. I want to turn to a few key trends affecting the venture capital business. First off, the good news. The biotech guys have got it. No longer are they moaning and groaning about $200 million drug development deals. In fact, folks in San Diego are leading the way. Domain went to Russia and did a partnership. Avalon's working with GSK to start companies. And Mike Gray of Pappas Ventures took Lumina from founding to a over $260 million exit in just 3 years. So that's really, Mike, I know you're here, so Mike, so stand up, because that's really cool. Mike's way over there, okay? You want to find out how he did that, okay? So when you combine that with great aftermarket performance, we're really seeing institutional investors who are the top of the food chain that drive it all the way down to you as an entrepreneur. They're showing a steady return to the asset class, and that's exciting. Next, the tough news. Series A is the new Series B. I recently tweeted out an article that I thought was great, and in fact, 76 of you clicked upon it. And it talked about the very real point that tech VCs no longer are looking just for a company that has a great team and a great market and a great product. They want people with all of that that are crushing it. With so many seed and angel-funded companies around, the 50 or 60 large venture firms that control 70 or 80% of the money can afford to sit back and see which companies rise to the top based upon performance, not just potential. So it means as an entrepreneur, you really have to put the action into traction and get way down that curve to raise a whole bunch of money. However, the most amazing thing to me is that there is money everywhere. You know, not just 50 or 100,000, or my friend Roy Lassard's in the audience. We used to be happy when he could find $250,000. But, you know, people have raised I meet young companies, they've raised $400,000, $500,000, $1 million. You know, there's angels, there's crowdfunding, there's TCA funding $20 million a year. At EvoNexus, they've got Qualcomm and Cisco funding companies. So there is money everywhere, but unfortunately, it's easy to get fooled that raising money is an easy thing to do, and that every deal goes to the moon as a WhatsApp. I call this the TechCrunch syndrome. If you live in the TechCrunch world, everything is like that. But in the real world, it's more difficult than that. Therefore, I suggest you always keep in mind point number 2 and figure out how to make as much progress off that first capital as you can. And if you need more hints, if you go to our website, we'll have a video of our seminar on angel financing we did last month. There was great content in it about that first round of financing. So I would suggest you do that. So what should you do? You can't change markets. You can't change macroeconomic trends. And, you know, hopefully Mayor Faulkner will help, but you can't even change regulations in the short term. You can only change yourself. So what do you do if you want to build a big and valuable business and raise venture capital? The first thing you can do is build a great company. We do hard things here in San Diego, and the market doesn't always reward that. But markets change. Enterprise software companies like ServiceNow are back in fashion, sporting huge market caps. You know, we make things here in San Diego, and makers are the next great revolution. You know, Illumina knew they were great and refused to be bought for $7 billion. Illumina is now worth over $20 billion. There are 23 million small businesses in America. I challenge you to not be one of them. Be great. And also be willing to fail. Go for broke and risk it all. Qualcomm is a great and large and valuable company. It is, in fact, the most valuable semiconductor company in the world here in San Diego. But many, including my VC partners, said it wouldn't work. CDMA would not work. It wouldn't scale. It wouldn't work. You know, so Irwin Jacobs had to be willing to be wrong. Great entrepreneurs frequently fail. They get fired, they lose money, but they get back up and try it again. And be proud. We are world leaders here, leaders in wireless, molecular diagnostics, unmanned aircraft, digital health, biofuels, sporting active gear, and even craft beer. That's important. So it is. You know, back in TechCrunch world, every little startup in Silicon Valley is claiming to be the leader in something. So I say, don't be afraid to be proud and be loud. And finally, support one another. Our San Diego collaborative nature is our strategic advantage. Support our local VCs as they go out to raise money to put to work in our community. Please support our sponsors that make these events possible. But most importantly, support an entrepreneur. Support them with your time and your network and your money. It's lonely late at night in the office, or when you don't have money for payroll, or you've just struck out on your 25th fundraising pitch. It's just damn hard work. So please, today, hug an entrepreneur. Thank you. We have a great program here today. We have great support from our venture capital community here. You saw some of the names up on the screen earlier. 8 firms provided substantial financial support for our 2-day event here. The largest of these is Qualcomm Ventures, and they're a great partner for us. We've been partners with them for 2 or 3 years now. It's a great working relationship. And I'd like to ask to the stage to introduce our keynote speaker, the head of Qualcomm Ventures, second largest tech VC firm in the world, head for North America, Quinn Lee.